everyone is actually enjoying the little bit more freedom now that we have. We are in post-circuit breaker mode. But like Tim pointed out, we are going to see the economic ramifications of COVID long after circuit breaker ends. And this is really one of the reasons why we are doing this particular topic today on how you can really capture opportunities or pivot your business using intangible assets for opportunities that come along during this period. But before I jump into the topic proper, let me just share a bit about where I'm from. All right, so again, my name is Zhikang, and I'm an IP strategist with IPOS International, which is a wholly owned subsidiary of the Intellectual Property Office of Singapore, or IPOS. So IPOS is the statutory board where it creates the regulation and policies for IP in Singapore. It's also where you go to register things like your trademarks and your patents, right? So then as the subsidiary, IPOS International is the expertise and enterprise engagement arm of IPOS. So we work directly with companies, and we actually share a joint vision where we both try to help companies in Singapore to use the intangible assets to grow their business, right? And to do that, we have three service arms. One is really on education. We have an IP academy where we help train we help provide courses such as IP 101 to things like advanced patent law, right? We also have a patent search and analytics team. So this is a group of really technical people. Most of them have PhDs. So if you submit your patent applications to IPOS, right, these are the folks that will actually examine the patents to make sure that they are worthy of being granted. These are also the same people that will look at patent data to derive technology or industry insights that you might not be able to get from other sources of data. Then we also have IP management and advisory arm, and that is where I'm from, where we work with companies directly to help them to manage the IP to achieve three aims mostly. So number one, which is to capture opportunities, which is closely related to our topic today. Number two is to reduce the risks in the business. And number three, to reduce the business costs. Okay, so that's just a short introduction to IPOS and IPOS International. Now the topic for today, there's two main parts to it. One is on really how to capture opportunities of pivoting a business, and the other part about it is on intangible assets. So before we jump into the pivoting bit, actually I would like to give an introduction of what intangible assets are and why they're important. And that should sort of set us up for the rest of the webinar today. Okay, so many of us are actually familiar with the term physical assets or tangible assets because you see them, right? Things like equipment, things like inventory, even things like cash assets. They are listed down and very easy to see. Right? But when it comes to intangible assets, people may be less familiar. Those who are in the IP field might be more familiar with registrable assets, such as say your trademarks or the patents. But very often your non-registrable assets, such as data, such as systems and processes, such as know-how, they're very often neglected because they're not listed and identified anywhere. If you take a look at your company's balance sheet, right, you'll see all your physical assets listed there. There's a value ascribed to it. It's very easy to identify them. You might see a bit about your brand. You might see some software code, but typically there is no value ascribed to the rest of the intangible assets that you see here. And because of that, because they're not listed anywhere, very often they're not well managed and they're neglected by the company. And that's really quite a pity because intangible assets really do form quite a significant bulk of the value in the company nowadays. And I'll just give you an example to illustrate that. So the chart that you see here on the screen is actually, it shows the proportion of value of intangible assets to tangible assets in the US S&P 500 companies. So back in 1975, less than 20% of a company's value is in intangible assets. And you actually see that in the mix of companies then, right? So out of the top 10 companies then, you have 7 that are oil companies. Then you fast forward to 2015, and you see that the tables have completely flipped, right? So instead of having less than 20% of the value in intangible assets, you see that less than 20% of the value is now in tangible assets, meaning that intangible assets form more than 80% of these companies' value. And again, you see that in the mix of the companies. So instead of the oil companies now, you see the top companies are your FANG companies, right? Your Facebooks, your Amazons, your Googles, your Microsofts. But that doesn't mean that if you are in an infrastructure heavy company, right, that you don't have a high proportion of intangible asset value. Because in the top few companies, you still do see companies such as Exxon is inside, you see J&J, right? So it gives a sense across different industries, intangible assets have become an indispensable part to the company. And this doesn't just apply to the US. Closer to home, if you look at Indonesia, you look at China, you look at India, the intangible asset values of the companies there have actually more than doubled in a very short 4 years. And these were actually statistics released by Minister Indrani back in about 2018, right? And again, bring that even closer to home, if you look at the companies listed on the Singapore and Hong Kong Stock Exchange, and we're talking about all the companies here, not just the blue chip companies. And amongst all these companies, 10% of them, about 10% of them have more than 80% of their value in intangible assets as well. So you can see that this trend where intangible assets are becoming more important is really taking place all over the world and across all industries. And now that we have a sense of why intangible assets are so valuable, I'm going to give you really a flavor of why they're so important. Right, so take the example of you as a company and you release a new product in the market. So say the product is a follower product, right? It's not particularly innovative. It doesn't provide any features that are not already available in the market. In that case, your product is unlikely to be very popular. Your competitors are likely to want to compete you. Then in that case, whether you have strong intangible assets or not, it's not quite important. But say you do release a very innovative product into the market. It provides benefits that none of the other products out there can provide. And that is when your competitors will come after you. That is when your competitors will want to copy your product, right? And if you have nothing that can stop them from copying your product, that is when you will just start competing on price, because all these other products can offer all the same benefits that you have, and you have nothing except for your price point to compete with these other people. And because you cannot command the margin, you lose all that potential return they've gotten from your investment in R&D. And this is when intangible assets become really important, because very often, strong intangible assets represent a strong barrier to entry. And think about your patents, which provide a 20-year monopoly on a certain technology, or even trade secrets, right? If you keep a certain thing secret, your competitors can't copy you, and they can't produce the same product. So when competitors can't copy you, and you're able to offer a product that's differentiated in the market, that's when you can command the margin, and that's when you can get the proper returns of your investment into product development. And when we talk about intangible assets behind the product, we're not just talking about one intangible asset or even one class of intangible asset. It's not about just having a patent protected product. It's always about having a whole suite or a whole portfolio of intangible assets that is protecting a product. So just take Nespresso as an example. We all know Nespresso as the machine that magically turns a coffee capsule into a cup of coffee for you, right? And the technology was really great when it first came out. But behind this machine, it's not just the patent or the technology that is behind this product. It is an entire suite of different intangible assets, right? There is the brand or the trademark protecting it. The aesthetic design, the look and feel of the machine is protected. And of course, it's a trade secret behind the coffee capsules. So even now, though the patents have expired, Nespresso continues to command the premium in the market simply because it has all these other intangible assets behind it. Okay, so that's just a very quick introduction to intangible assets, and that will set us on the same understanding of what this means when I talk about it for the rest of the webinar. And now I'm going to jump into the part about pivoting a business or capturing opportunities with intangible assets now. And you have seen in a lot of articles out there, the mega trends that are coming or being accelerated by COVID, whether it's diversification of supply chains, whether it's greater use of online tools, whether there are ways to better social distance, all those good things out there. I'm not going to talk about those mega trends. You can read those for yourselves. But what I'm going to do is to show you a couple of case studies about how our own local companies, Singapore companies, have used the intangible assets well to capture opportunities during this period and to turn them into business value and to grow them into additional intangible assets that will continue providing them a lot of value even after this COVID-19 crisis ends. Okay, so as I go through, I'm going to be talking about quite a bit about these different classes of intangible assets. So just keep them in mind as well. So this first case study that I have is on Razer. Everyone here will know Razer as one of the top global gaming hardware manufacturing companies, right? And they have been in the news quite a lot for all the great CSR they've done, right? They have been manufacturing masks and they have been distributing them out for free. But if you take a step back and think about it, right? How was Razer actually able to pivot into manufacturing surgical masks so quickly? And out of these CSR activities, they as a business, right, gain any value out of it? So let's take a look at this from the lens of intangible assets and review the timeline of activities. So on 19 March, Min Liang on his Facebook page, right, actually announced that he was going to convert some of the Razer manufacturing lines in China to start producing surgical masks. So if you look at this from a purely tangible asset point of view, you will think about the manufacturing equipment, the machines, right? Those alone, I mean, how do you turn them from manufacturing, say, keyboards and mice to suddenly turn them into surgical masks, right? And what they relied on to enable this pivot were the intangible assets of Razer, right? So in that same Facebook post, Min Liang said that the engineers have been working 24/7 to really turn this production lines around. So what they did was to, while the machines are important, there was the intangible assets, right? The know-how of the engineers that allowed them to adapt these machines and to pivot them into manufacturing surgical masks instead. And with this pivot, right, they as a business, they strengthened the intangible assets out of it as well, right? Because with all the positive publicity, they got a lot of goodwill. All that goodwill is going to be accrued back into the brand, and that strengthens the brand, right? Then as the supply from China couldn't keep up, right, the demand was too high, and you know there are supply chain disruptions between China and Singapore as well. So then on 1st April, Razer actually announced that they were going to set up Singapore's first fully automated mass production and packing line, right? And they did this very quickly, right? Just on 24th April, in 24 days, they announced that they have finished their production plant, right? They had completed, they had set it up. Again, how were they able to do this so quickly? Right, so if you take a step back, you might think, okay, Razer had their own engineers. They probably can do this themselves. But if they relied on that, they rely on their own intangible assets, they rely on their own know-how, they might not have been able to do this so quickly. So what they did instead was to rely on somebody else's intangible assets. Right, so what they did was to partner up with a company called Sunningdale Tech, and they are a Singapore sort of manufacturing consultancy company that's in the space of medical devices and more. So they relied on their engineers' know-how to quickly repurpose an existing facility and turn it into an automated mass production and packing line, right? So in this case, rather than using their own intangible assets, they relied on someone else's intangible assets to capture this, to do this CSR activity that they wanted to do. Then more recently, on 13 May, Razer announced that, well, of all these masks that they were manufacturing, they were now going to distribute them through vending machines throughout Singapore, right? And again, this is a great CSR move. So instead of having the masks being distributed and sold by different merchants, they are now just distributing them for free using their own machines. So all you had to do was download Razer Pay and go to the vending machine, just scan it, and then you get a mask for free. Now, by doing this, you might think, okay, did Razer as a business gain anything from this, right? So to look at the business, you have to look at it against the backdrop of Razer having really made a lot of forays into the fintech space. So some of you might remember that back in 2017, Min Liang replied on Facebook that to PN Lee that he was going to create a unified payment platform for Singapore. Then in 2018, they launched Razer Pay. They set up a new subsidiary called Razer Fintech. And just last year, Razer led a consortium of different companies to apply for a full digital banking license in Singapore. So you know that Razer is making a lot of effort to enter the fintech space. But in terms of Razer Pay, it seems like despite the efforts, they haven't been that successful in Singapore. They are not one of the top e-wallets in Singapore. And I'm just saying this based on my own opinion. There is a survey out there that really lists down the top e-wallets in Singapore. right? But suddenly with this COVID and the distribution of masks through vending machines, they probably saw an opportunity to get users onto Razer Pay, right? Because now to get the free mask, you have to sign up with Razer Pay. And if a lot of people really go get the mask, right, they have really greatly increased the base of users of Razer Pay. And with this increased base of users on Razer Pay, that really puts them in a better position to talk to merchants, to ask them to accept payments through Razer Pay. And indeed, that's what they did, right? So I didn't have time to put this into my slides, but I saw on the news just last week, I think it was 27th of May, Razer actually announced that they were working with hawkers and merchants to actually accept payments through Razer Pay. So then with more merchants on, that again will attract more users on. And this really creates a network, right, for their Razer Pay. And such a network is an intangible asset that's very valuable for any fintech company. It's similar to what Amazon did when they first started, right? They tried to amass users onto the Amazon platform, and that attracted a lot of merchants, and with more merchants on, that attracted more users. So that network effect just goes round and round. And with this, with this particular COVID crisis, Razer saw this opportunity to do the same for Razer Pay, and that could really pay off for them in the longer run. And in addition to the network that they have, they're also gaining user data as well, right? And I'm not just talking about personal data. I'm talking about the preferences of different demographics that are getting on, right? Because you know Razer's traditional demographic is on gamers, but with this particular exercise, they could have gained an entire different demographic onto Razer Pay. And the different demographics, if they, for example, push advertisements through the app, they will be able to see the preferences of the different demographics, and they can use that to guide the product development in the future. So again, that data is a very important intangible asset for the company. And that again is the same for many companies out there as well. Right? And of course, all the positive publicity that they've been gaining, all the goodwill that they've been accruing, that's going to go back into the brand and strengthen the brand in the long run. Right? So with this example, you can see Razer has very cleverly used their own intangible assets to know how on, say, mass manufacturing, as well as somebody else's, a third party's intangible assets to create the masks, and through very shrewd CSR, use that to create a lot of business value and intangible assets that will continue to provide a lot of value even after the COVID-19 crisis ends. Okay. Okay, so this is I took this off Milang's Facebook page, so you can see even on the mask have the brand on it. So they are quite serious about pushing their brand out there. So okay, I'm a bit conscious about time, so I am going to skip my bubble tea example. But if you guys have any questions on this, feel free to bounce this back to me during the Q&A session. But I'm going to skip to my third example here, which is on enrichment classes. And this was an actual company that we worked with. So, so this particular enrichment center, they really prided themselves on having very good pedagogy. They prided themselves on having very good quality content that could teach the primary school kids really well. And we actually first started work with them before this COVID-19 crisis came about. But at that time, they were already making moves to go online, right? Because they had expanded physically to a certain extent in Singapore, and the cost of expanding was going up. And they wanted a quick way to reach out to more students in Singapore as well as overseas, right? So by going online, they could do that a lot more quickly. And of course, with this COVID-19 crisis blowing up, this completely accelerated the move online. So when we were working with them and they were looking at moving online, they faced two main challenges. One was on content, and the other was on the reach, right? So first on content, when they wanted to move online, they had to find interesting and interactive content that they could put online, right? Because say videos or tutorials online, it's a lot harder to capture the attention of the users, not say primary school kids, right? Compared to say a physical classroom, where there's a teacher there to interact with them. I mean, same with what we're doing now. And I'm sure as you're listening to this webinar, you're probably reading and responding to emails as well. So they really wanted to find content that was interactive and could capture these primary school kids' attention. So when we worked with them, they actually gained a very good understanding of the different types of content that they had, and they could pull out those that they could easily translate into online content for their online audience. And of course, at the same time, the content had to be sufficiently differentiated so that their online content doesn't, or their online business doesn't cannibalize on the business of their physical tuition centers. So because they had a good understanding of their content, they were able to do that quite quickly and quite well. Then the other challenge that they faced was on reach, right? So the point of them moving online was to really expand their reach out to beyond their current students or even past students. So if they were to just rely on the database of the parents of the existing students or the past students, it wouldn't increase their reach by that much. So then what they actually did and what they could do was actually to work with other enrichment centers, right? So this particular company that we're working with, they only conducted enrichment classes in a particular subject, in a few particular subjects, right? So what they could do was to partner up with well-branded enrichment centers that were non-competing because they were teaching in other subjects, and use the brand, and of course reach through their own database, use the database of these enrichment centers to reach out to a greater audience, right? And these were non-competing, so they could form a partnership, use their brand, use their databases, and to very quickly expand the reach of what they could do online, right? And this is also another case of how a company can leverage not just its own intangible assets, but another company's intangible assets as well to really come up with a good business strategy that can allow them to capture any trends that might be accelerated during this COVID crisis and turn it into business value and further intangible assets that can contribute value back to the company even after this entire crisis has blown over. Okay, so you have seen how these companies really have used the intangible assets well and used somebody else's intangible assets well to capture these opportunities. Then the question is, can you do the same as well? All right, so perhaps you can, but it always starts from the basics. And the basic here is having a good understanding of what your intangible assets are. And that means being able to identify what your intangible assets are, being able to understand how they relate to the business, how they are important to your business, and being able to really identify the strengths and weaknesses of these assets. So once with a good understanding of these various points, you can see how you can use them or transform them, redeploy them, repurpose them to capture some of these opportunities that might come along during this crisis period. And this understanding to put it in good state, even in normal. We actually have an article online where we talk about how if you just view your business through the lens of IP and intangible assets, you could transform your business. So this is a free article to read. You can just take a photo of the QR code or click on the link and you can access the article. And if you need more help on that, this is one of the things that we at IPOS International help companies do as well. So if you have any questions, feel free to bounce them at us during the Q&A. If not, my email is there. Feel free to email me as well. Right, so I think that's about all the time I have. Happy to chat with you guys a bit more during the Q&A. But I'm going to hand my time over to Tyler now. Right, Tyler, over to you.
Thanks, Zhikang. All right, so what I'm going to do is I want to make sure that you guys can see my screen here and put up these slides for you. All right, so is my camera on? Doesn't look like it. Let's see. All righty, guys, appreciate the time. And it looks like we've got over 200 people on the call now. So great attendance. Appreciate you taking your time with us today. And Zhikang, thank you so much for really starting off that conversation and opening up the idea of intangible assets. I mean, we worked together for a couple of years now, and it's good to see that we've got such a good turnout for this because this really is an important topic. And so I'm going to continue on, again, can just continue on a little bit more from what Zhikang is saying. And those who aren't aware of who EverEdge is, we do have an alliance with IPOS in which we help provide advisory services to SMEs in Singapore. We also have offices in Sydney and Sydney, Australia, and Auckland, New Zealand. Been around quite a while, and work with companies big and small. And when people ask me, what really do you do and how do you help companies and, what is it that your current firm does? I tell them we do 4 simple things. We help people to identify intangible assets. as an intangible asset specialist. Okay, once you've identified them, you can then look at identifying where the risks are and helping to reduce that risk around those assets. Once you know what you have, you can actually look to value it and grow it. And then last, of course, once you know what you have and what it's worth, you can look to actually unlock that value through various means. Zhikang mentioned, partnering, and I have a case study on that, which I'll show as well. So really, the reason why this is so important is because of that inflection of value from tangible assets to intangible assets from the graph that Zhikang put up earlier. Really, a lot of boards, management teams, owners, they may not fully understand all of the assets that they own. And if they don't understand those assets, they may not understand the risks or the financial implications, and then even what to do with it. And so most companies will have an accountant or someone who manages a fixed asset register in the company. And I want to go ahead and kick off with a poll here. So if you are on your screen, I'm going to go ahead and launch a poll around this question. Okay, go ahead and put your votes in here. Does your organization have an intangible asset register? All right. Now, most of you will have a fixed asset register. That is very, very common, but actually a one dedicated to intangible assets is less common. And the more that we've done these presentations, and I've gone through this slide deck with companies, it's very rare to see more than half of the companies that have an intangible asset register. So it looks like we're about 30%, 28% right now, if you guys can see those results there, with about half of you have voted. So I think if we looked at that, the majority of companies still don't have an intangible asset register. Sometimes they might have things listed on a risk register, but often they are left off. So I've got a couple more polls, so I'll go ahead and share those results there. So you guys can go ahead and take a look at that. 26% with about 100 people that voted. All right. So one of the difficulties of intangible assets is they are known by different things by different people, and sometimes they're called different things. So if you ask a CEO, they might call it competitive edge. If you talk to an accountant, of course, you refer to it as goodwill. If you ask a lawyer, they might refer to it as IP. But really, these are the assets that actually drive value in most businesses. This is what Zhikang was talking about. What is that secret sauce that takes you from subsistence margins, where if your only lever is price, you're headed down a bad road, right? Whereas if you have something that's unique and different, you can actually start to get market share. You can actually start to charge higher premiums and start to get margin on your product. So I'm going to give a couple of case studies that show this. And as we talk about how we can pivot and move, especially in terms of COVID, this is one where they've used intangible assets as an exit value driver. Okay, so if in COVID you say, look, I'm over this roller coaster, I'm ready to do something else, but I have a business, or I'm ready to retire, or I want to go into a new industry, you might be thinking, let me actually consider selling my business. So this is about a sale opportunity. This was a company that we worked with that was selling their business after 30 years. Went to an investment bank, and they said that they'd get about 4 times earnings for the business. We went in and actually helped them to strategically value the data which was being used, and it was meticulously collected, it was meticulously stored, and it was very, very valuable. And ended up selling that company, the value, we ended up selling that company for 32 times earnings. And the company that bought it was actually an insurance company, and they were less interested in the operating business than they were about the specific data asset. So if you have a business and you're thinking, well, what can I do that's unique? Can I do that's different? Data and data assets aren't always the panacea. They're not always the only way you can go, but that is one area that if you have better data, you know more about your market than your competitor, you might have a slight advantage. So this next case study is about a joint venture, okay? Using the intangible assets as a strategic lever. Now, if you're looking to pivot and or like Razer, you need to find ways to move into a new industry or partner with another industry. A lot of companies think, okay, well, let's look at doing a joint venture or a partnership. This case study is about a joint venture between an Australian company and an American company that I worked with. And both companies were going to put money into this joint venture. They wanted to do a 50-50 ownership so that they each had equal control. But my client, the Australian company, was providing all of the intellectual property. They had the software, the platform, the engineers, the know-how, the code was all being provided by the Australian company, and then the US company was providing some of the network and brand. And so we said, well, those are all good assets, but let's do a valuation. We weighed them up in a valuation report, and it ended up that we were able to lead them to still maintain a 50-50 JV. So they maintained ownership, but they only had to put up $3 million in cash for their contribution. So we saved them $22 million in cash. And the major lever there was by being able to articulate the value of their individual intangible assets and breaking it down to those assets. Now, this company is a company that looked at how they were able to pivot. How do they make a change in industry? This was actually it was a dairy company. They were making yogurt. You can see that little crushable cup is actually their product. And they said, look, we've got ice cream, we've got yogurt, we've got all these products. Let's go and become a yogurt company. And when we articulated the value and the contribution that was being derived from the assets of the business, we realized that it wasn't actually, it wasn't their size, it wasn't how good their product tasted, because everyone can claim to have a best product. It was really came down to a unique factor of the packaging itself that used less plastic than competitors. And so we actually said, look, you're able to charge a lot less, you use less raw materials. This is actually a competitive advantage. Why don't you, instead of trying to go into market and build this yourself, look at doing a joint venture, look at doing a license opportunity. So they took both those options. They looked for joint ventures that didn't really work out for what they were doing. So we helped them with a licensing agreement. We got a patent over the design of the actual crushable cup. And then they were able to license it to major yogurt companies in the US, China, South America, and they still have royalties coming in on this product today. So they did a major pivot from being a yogurt company to becoming a packaging company, because that was where their competitive advantage really lied. And they didn't really understand that fully until they broke down all their intangible assets and realized which ones were contributing to the margins. And when it turned out that it was just the packaging, they said, let's focus on this and go all in. So my last case study is about a data center. And so a lot of companies, if you are in the startup stage, you need capital. And it's really, really hard to grow when you don't have a lot of sales, you don't have a lot of brand, you don't have a lot of network. This was a company that we worked with called AirTrunk. You can look this up. They started in about 2015. Robin, the CEO who we worked with, came to us and said, look, I have an idea and I have a way to develop data centers that use significantly less power and power consumption. And anybody in the data center industry knows that even a small little bit of savings can go a very, very long way. We did a valuation for them of this. They needed a lot of capital to get into the market. And one of the big four accounting firms that reviewed this, they said, at our most frothiest valuation, maybe 40 million is the maximum that we could say that this valuation was worth. We sliced up the intangibles, his networks, his relationship, and his Rolodex, people he knew at Microsoft and Yahoo. And we did the valuation, and we ran the first valuation. It was first valuation was 80 million. It ended up being raised to 200 million, of which they then raised up to 400 million in equity and had a debt facility from Goldman Sachs for 750 million in debt. They just sold to Macquarie Bank in February for 3 billion Australian dollars. All right. So just because you have an idea Doesn't mean you can't raise capital on it. There's a lot of money out there. If you are in a situation where you need to pivot your business, but you've got great ideas, you've got great people, look for those opportunities now. So we've talked a little bit about value, right? And most of the time, traditional valuations look at fixed assets and cash, and they look at the cash flow that can be generated, and then there's some sort of a multiplier that's applied on top of that. I'm a chartered valuer and appraiser with the Singapore Accountancy Commission. And under certain accounting regulations, yes, there's certain ways that you have to value certain assets. Intangible assets, there's a very broad spectrum of how they're valued. Most of the time, the easiest way is to put them on at cost. But we know that there is very little correlation between the cost of something and its actual value, right? I can buy a car, say I pay $50,000 for the car, or I can try and build a car. It might cost me $1 million to build it. They're both still worth $50,000 at the end. And so what you need to be focusing on is when you take out the traditional valuation methods and look at what can really move the needle, it comes down to intangible assets. Intangible assets add strategic value because they add value to particular buyers and particular members of the economy that would actually value what you have more than someone else. So it can be a significant lens, a significant lever to take what you have, the assets that you have, and make them worth more, either maybe in a bigger company, in a different landscape, in a different geography. So as you look to pivot your business and you look to change, don't just think, how do I sell more, right? Think, where can we sell more? How do we be faster? How do we be stronger? How do we save more costs? Who could I partner with? What are the opportunities in this market that I could go for besides just purely going sell more, sell more, sell more, which is sometimes the hardest route. So when you have things of a lot of value, of course, risk comes in. If you have something that's a lot of value, you can also destroy value very quickly if you don't understand what you have, or if you let it walk out the door. I'm going to talk a little bit about risk because you think about pivoting your business. Sometimes it's about, okay, where can I go next? But if you don't do it right, you can lose a lot of value in the process. So I'm going to actually launch another poll. So get your buttons ready. On my question around valuation, okay? I want to get an understanding of if you think that the business valuation techniques today actually capture the true value of intangible assets. Now, I've run the same poll with the Chartered Accountants Association, the ACCA, with manufacturing associations, with business quorums, and many specifically accountants who know this industry, who know the regulations, right? And almost always do we get significant results that show that intangible assets are very, very frequently left off in terms of value, left off the balance sheet. So I will go ahead and share those results with everybody. About 75% said no, and 20% were unsure, with 5% at yes. Again, over 100 results. So thank you guys for participating. It's very helpful to see that you guys are listening. All right, so as we talk about the value and we talk about how not to destroy that value, managing the risk is one of those primary ways you can retain value. So I'm going to go fairly quickly through 5 quick case studies, or 5 quick principles on value, okay? So major risks, okay? How to maintain value. First of all, don't worry if you didn't catch those. I'm going to go through each one individually. Most companies leak like a sieve, all right? And most of the times that is through its own customers, suppliers, and employers. This can be anything from employee knowledge to customer lists, supply lists. And if those things start to slowly leak out of the company, it can be really hard to maintain your competitive advantage if you might have a unique supplier agreement, or you might have a star employee that brings in all your sales. If they went to a competitor, how much would that hurt your business? So don't let your companies leak, especially in times like this. If you're looking to pivot, if you're looking to go into a new industry, make sure you keep information confidential, make sure you keep your secrets secret, and make sure that you understand where the value is in your company so that you don't let it leak out. So the second risk is most companies actually can't prove they own their intangible assets. So, and you might think, well, why do I even need to do this, right? So let's say you get into a R&D situation where you go to build a product and you collaborate with A-Star and you say, okay, great, A-Star is going to provide some funding. They might provide some assistance from some of the professors there that know what they're doing. And then you bring in a university and your own company. Now you've got 3 people in this. Somewhere there has to be a log of who owns what, who's contributing what. Otherwise, it comes down to a legal fight at the end, which means that even if you produce a product, you write code, you build a software program, if you don't have chain of title, meaning you can't prove who built what and where, when the ownership was transferred and who owns what percentage, it's very difficult to either get investment, to get buyers, or to pass any type of a due diligence process when you try to exit that business. So don't get stuck in that situation where you don't actually own what you're building, or you can't prove that you own your intangible assets. Third, software. 80% of all software code is open source now. Most companies use some type of software. Even the standard car today has over 1 million lines of software code. And so this is the #1 area where risk, #1 area where malicious code and sort of toxic code gets into large organizations, software platforms, and networks. So make sure that when you are using open source, that it is scanned for malicious code, you know who owns it, and you know specifically what libraries and do you have rights to use those open source libraries. Brand ownership, okay? Half the companies that we see when we do an intangible asset audit or review, they don't actually own their brand. Now, some people think, oh, well, I've got a trademark, I own the brand. Well, there's different types of trademarks, word marks, image marks, okay? You need to know which is which. You need to know, do we have the right mark in the right categories, okay? Otherwise, it may not actually protect what you think it is. So get some help, get some assistance on this, make sure. We had a client who, they did a joint venture with a company in China. The China company said, look, we will handle the branding. You can use our manufacturing plant. And after a year, the contract ended up blowing up because the Chinese company just stopped responding. And the company saw their products still being put on the shelves. And when they went to go find them, they said, wait a minute, what's going on here? We own this brand. This is our product. You know, you can't do this. What ended up happening was the Chinese company had filed the trademarks and the brand in their name in China and said, don't worry to the Singapore company. We'll handle it. And then what turns out is they actually legally did own it. And there was actually nothing that they could do to stop them from producing that product with that brand in the China market. So be careful, make sure you own your brand and you know that you have the right trademarks in the right jurisdictions, in the right classifications. Now, last, FTO risk, threatened or actual IP litigation. There is massive growth in the IP world with the US and China now specifically as well. The amount of patent filings is increasing. And the more successful that you become, the more likely are that you are going to jump on the radar of one of your competitors or one of the big players in your industry, and they will look for every opportunity to kick you out. Now, if it's somebody like an IBM or an Apple or a Microsoft, they have hundreds and thousands of patents for that very reason. They want to own the markets, they want to keep people out, and they want to make sure that they own those particular industries. So just make sure that when you go in, you have the right approach around your intellectual property, get good advice, talk to IPOS, talk to an advisor like EverEdge, and have a good strategy in place so you know what markets you're going to go in, how you're going to go about them. Now, that's my last piece on those 5 risks. Now, I know I went quickly. We don't have a ton of time, but they will be in the slides afterwards. Give you some thought, or some food for thought to think about. I'm just going to finish off with this, right? Take a stance of where your company is. If it's time to pivot, you really need to understand your intangible assets and know where your level of awareness sits. So if you are in the denial stage, meaning we don't need to know any about this, don't want to hear about it, you're probably not in this call. If you're on the call, you're probably more in the reactive, protective, profit center, where most companies tend to sit. But if you really focus on tangible assets as a lever, you can push you into becoming an integrator, even in industry defining period. And so the last principle is really this: if it is time to pivot, you can start to rethink your business. Okay, that transition away from the physical to the intangible, really, it's been, this comes along. When something like COVID-19 comes around, it reminds us that there's change, right? And then there's real change. Everyone always says, change your business, innovate, and grow, right? Well, something like COVID forces you to really, really change. And if we look at specifically the world we live in and the businesses that we live in, the business models, that have been made for years and years, over time, they will always be broken. Okay, someone will come around with a new model, something like the internet comes around, and businesses worldwide change overnight, right? And some companies will thrive and some will survive. And unfortunately, some of them, will fail when something like COVID comes around, but it is an opportunity to actually look at what you have and either exceed and grow, or to shrink back, right? There's a quote that's attributed to Darwin, and it goes like this: "It is not the strongest of the species that survives, nor the most intelligent that survives. It is the one that is most adaptable to change." And yes, I know he's talking about animals in that case, but really it can be applied specifically to businesses as well, right? The intangible asset changes here, it's coming, okay? You were seeing it over the past 40, 50 years. They will play a stronger role in your company. So here's some ways that we can think about really rethinking your business and pivoting to more value, right? Leverage away from the physical where you can. Be scalable, be flexible. In terms of COVID, things are coming to come back on. And when they do come back on, be ready. We've talked a lot about value. Value doesn't just sit in the fixed assets and cash flows like traditionally, 40, 50 years ago, when capital was hard to come by, right? Businesses were valued by how big your factory was and how many how much inventory you had. And now they're no longer valued that same way. It's who has the best platform, who has the most subscribers, who has the most users. Those types of things didn't necessarily exist 50 years ago in the same way they do now. And even if you are facing horrible situation where you're shutting down your business in a scenario like COVID, right? There's always value to be found, even in a shipwreck, okay? You might have customer lists. You might have software that you've written that might be applied to something else. You might have a customer database that is very well kept. You might have very, very good sales documentation in the sales process. There's potential value in any of those assets and all those intangible assets. So take inventory first. What do you have in my business, right? And you can work with IPOS and EverEdge on this to go through an audit or a foundation to really start to dissect what assets you have in your business. Then you can say, okay, where should I be focusing my time and attention? And that will really help you to know, okay, is it time to pivot my business? Where do I go next? And what should the strategy be? So I'll go ahead and pass the time back over to Pei-Wan. I know she's got a couple of wrap-up slides here, and we have a bit of a Q&A. So I'll go ahead and just take a quick look on the Q&A section here. And Zhikang, you're probably still on here, and the first question is actually to you. So on the Razer case study, there's discontent online on how they leverage the CSR goodwill to garner buy-in on the Razer Pay, and the subject of mass distribution. Okay, you've probably read that. You want to go ahead and respond to that?
Yeah, and thanks for that question, Gary. And I actually saw some of those discontent online. It's not just limited to Hardware Zone. There's quite a few articles on it. But I think at the end of the day, for all the CSR that Razer is doing, Razer is a business. They are using that as a way to increase our intangible assets. Might not sit well with some, but I think generally you're not forced to get their masks. So if you want to get their mask and you get onto the system, I think it's a willing buyer, willing seller system. So I think there is still quite an amount of good positive publicity for them anyway. So I think it's still quite a shrewd tactic that they did. But you're right that they in the process they did garner some discontent as well. Yeah. And actually, I saw this other question from Radha in the chat rather than the Q&A on how intangible assets only for big companies like Facebook and Google. And that is the impression that a lot of people get because that's more talked about, right? And SMEs, because a lot of time they don't have the registrable intangible assets, right? They might not have patents. They might not have design registrations. So a lot of people get the impression that SMEs actually don't have any intangible assets. And that is not quite true. Both at EverEdge and IPOS International, we actually work quite a lot of SMEs. And these SMEs, we find that a lot of them are actually quite innovative. And they actually do have quite a lot of intangible assets. And even if I say a system integrator, there's always some sort of deep know-how or core know-how within the company, some trade secrets within the company that really allows you to have survived for so long, that have allowed you to compete in the market, that have allowed you to differentiate yourself in the market. And these, having good understanding of what these intangible assets are to SMEs even, these are really important and can be really valuable to the company in helping you transform the company around when other opportunities come along. Let me give you a very quick and easy example. Most of you would know, for example, Kaylee Rose Meats, right? They sold their business for like $4 million a couple of years back. Now, we think as a hawker, Kaylee, I mean, what sort of intangible assets would they have? But they had a very good secret recipe for the roast meats. And of course, they had a very good brand. And of course, those were well protected, right? If everyone could call themselves Kaylee, everyone could sell the same roast meat. You can imagine they wouldn't have been able to sell their business for $4 million. But even for a hawker like them or a food stall like them, just because they had very good intangible assets, they had good protection over it, they were actually able to generate a lot of value when exited. And that's just one very good example of how SMEs actually can have intangible assets that are really valuable to the company. Tyler, not sure if anything to add to that.
No, I appreciate that one. There is a couple other people raising hands. It's good. There's a couple of other questions in here. Looks like there's a question from Radha Krishna that was in the chat, actually. It says, intangible assets are only for big companies like Facebook, Google, even SMEs can have these, ? Right? Absolutely. All size companies have intangible assets. You know, some of the case studies that we use are big companies and some are smaller companies. And a lot of times it's actually the startups and the small SMEs that need to be more aware of those intangible assets because those are the secret sauce. Those are the things that make them unique. And so absolutely everybody has intangible assets. Back over into the Q&A section. Gary, you've dropped a few in here. That's good. Okay, leak due to breach of confidentiality issues. Of course, security issues are common. I think we covered that a little bit. And let's see, there's one.
There are a couple on valuation. Do you want to go ahead and answer those?
Let's see. Ivan, here's one on valuation, right? I have a question on SMEs. Mainly small SMEs. Is IP valuation accessible to small SMEs who might need the service? Okay, and is it normally costly? Is the second follow-up question there. The answer to that is, of course, we can do an intangible asset valuation on any size. The question that I would ask you is, what is your purpose for doing it? Okay, and most of the time, this is done for a particular transaction. Okay, if you're looking to raise capital, if you're looking to value your shares, if you're looking to do a merger or an acquisition, if you're just looking to say, hey, I just want to know what my intangible assets are worth, for smaller companies, it's probably less valuable than maybe larger companies, which need to benchmark that each year to know how they're doing or how they're moving. So can they do it? for a small SME, yes. And in fact, you know, with some of the programs that are run through IPOS, there's even potentially funding for some of the audit services, strategy services, and then follow-on projects that can include things like valuation and advisory services from law firms and other partners that can help you do these things. So at the end, there is a way to submit your name to schedule a session. Please do if you would like to have a free session to get some information on how this costs, how it works, and what size you need to be. The cost really depends on the size. I mean, if you're looking for small desktop valuations, a few $1,000s. If you're looking for sort of mid or large companies, we've done, you know, valuations for, you know, very, very large transactions and corporates that are in the hundreds of thousands of dollars. So the price really is depending on the scope. So I think, unfortunately, due to time, there is a lot of questions. We'll try and answer some more of these, maybe get back to you on email. And we've got 2 or 3 minutes left. Peiwan, would you mind go ahead and taking over and taking care of the housekeeping items and letting everyone know where they can get more information and go from there?
You're on mute.
Yep,
Yeah.
sure. Yep.
Great, thank
So
you.
let me just quickly pull out some of the resources that they can't actually get it. Zhikang, do you mind helping me to share the slides?
Sure. Just let me pull that out.
All right. So while Zhikang is sharing the slides, let me just thank Zhikang and Tyler for their sharing, and a big thank you to all the attendees for, you know, asking the questions and listening, joining us for this particular sessions. So as mentioned before we end the session, I would like to share with all of you some of the resources that may be useful for you. You may want to get your phone ready to scan some of the QR code that I'm going to show on the screen for quicker access. So first of all is the business guides. We have developed a series of 15 business guides for enterprises to guide them on IP management journey. Along with the guides, there are more than 30 case studies videos uploaded to basically share with you how some enterprises have leveraged on their intangible assets for business growth, so as to give you some inspiration. And if you would like to understand about some of the technology trends such as healthcare, AI, 3D printing, crowd security, etc., there's a number of technology scan report that you'll be interested in. And all these are accessible on our IPOS International website, or you can actually use the QR code. You can scan the QR code on the screen to lead you to the page. And the next tool that we have is a tool called Illuminate. This is a tool that can help your company access your intangible asset risk. It takes about 10 to 15 minutes to do the test, and what you get is an assessment of your current risk level, give you some key insights on what are the potential intangible assets gaps, and also to recommend and give you some recommendation on how you can manage this risk. So if Zhikang, you move back to that slide, there's a QR code there. You can scan, or you can access our IPOS International website to get to that tool. The next slide, please. Okay, and our partner EverEdge also has some free insights paper on intangible assets risk and valuations, useful for you to get practical advice and recommendation on how you can better manage your intangible assets to drive revenue growth and profitability. So you can note down the email address and drop them an email today. Okay, and last but not least, we understand that time is very short to address every question in depth during this session. So this is what Tyler has mentioned. If you have more questions like those we have shown on the screen and would like to have a deeper discussion with us, please, scan the QR code, fill up the booking form, and then we can arrange for a complimentary 45-minute sessions to see, how we can better help you with that. All right, so once again, my name is Pei Wen, and on behalf of Zhikang and Tyler, we would like to thank you for spending with us this 1 hour. We hope that this is a good investment for your time. And so before you leave the platform, we'll also deeply appreciate if you can help us with a quick feedback poll. It's going to come out from the screen. And those questions that we have not answered, we'll try to probably reply through an email after this session itself. All right, so we'll be grateful if you can do the feedback. And with that, keep in touch, everybody. Stay safe, and we hope to see you in another of our events. And enjoy the rest of the day.
All right, thanks for joining us, guys.
Thanks, everybody. Appreciate you being on the call. Take care.
All right.